Live from Frankfurt, the day after the European Central Bank decision, this is Daybreak Europe. I'm Lizzie Burden with your top stories. Feeling fragile. Global equities primed to slide lower after a bruising three-day tech rout. Silver and Bitcoin edge higher in volatile trading. Double-digit decline. Amazon's shares plummet after hours as investors take fright at the company's plans for a $200 billion capex explosion. Plus, oil traders on tenterhooks as the US and Iran sit down for nuclear talks in Oman today. We'll bring you the latest. Well, happy Friday. We saw those deep declines in US tech stocks yesterday. Amazon shares dropping 11% in extended trading. The Nasdaq seeing its worst three-day rout since April. And that sell-off set to continue today. As you can see, Nasdaq futures down 0.3%, though Euro Stoxx 50 futures are now just in the green. But dramatic moves on Bitcoin. It had tumbled to nearly $60,000, less than half its peak price in October. Pairing those losses now, we're at $66,407 a token, up 5.2%. But take a look at silver as well, bouncing back to up more than 6% now. But of course, again, this is after steep losses over the past week. It has been a volatile one, a lot of introspection in these markets. Now, the risk events on the docket for today include the US-Iran talks in Oman, Iran's state-run IRNA saying that the talks are going to focus on broad topics rather than technical issues. Then at 3 p.m. London time out of the US, we get the University of Michigan sentiment data for February. Consumer sentiment expected to have edged lower as worries about the jobs market intensify. And then at 5 p.m. London time, the Fed's Philip Jefferson will be speaking, so we'll get his view on that latest data. Plenty more could still happen before the weekend, so let's set you up for the day ahead. We begin with equities and cryptocurrencies regaining some stability after early losses in Asian trading following steep declines in US tech stocks. Let's take the temperature of these markets. We could go to Winnie Su in Hong Kong. Winnie.
Yeah, morning, Lizzie. Overall, the sentiment is still quite weak, especially when you see markets so volatile. We are talking about the MXAP down more than 1% earlier today. And then we are just erasing all the losses that we saw so far this morning. Now, overall, it is lots of jitters in the market, but we are headed for our worst week still since December, but still faring better than what we saw in the S&P 500 throughout the past week. And that's partly helped by how our region is a bit more exposed to the AI supply chain, as well as the recovery in the South Korean market. As you flip the board and take a look at how that market is doing today, because actually for the Kospi index here, down about 1.5%, while the market, the benchmark was actually down about 5% earlier today. So quite some recovery there, helped by some dip buying from the retail investors. And also, Citi came out with a note saying that they are expecting, or they are hiking the target price for the Kospi index to 7,000 by the target price for this year. And that's about 40% from that current level, talking about the benefits from corporate governance and also the strong exports. So overall, seeing some recovery across the board, with SK Hynix actually flipping into the green some earlier this morning as well. Now you flip the board and take a look at another contributor to that recovery in our Asian market, which is the Japanese stocks, actually doing pretty well today, with the topics up more than 1%. And that is helped by some positive earnings from the likes of Ajinomoto, but also with expectations of a Takaichi win into our election this weekend. Now, overall, when it comes to Japanese yen, holding around that 157 level against the dollar after 5 days of weakness already. And the 30-year yield continued to fall for another day with that solid auction from yesterday. Back to you, Lizzie.
Winnie, thank you so much. That's Winnie Su in Hong Kong. Well, let's get the bigger picture now. This week, of course, has seen huge levels of market volatility, with some of Wall Street's favourite trades in tech stocks, gold and cryptocurrencies absolutely collapsing. Now, there's been no single cause like there was last April when President Donald Trump's trade war sent markets into a fearful tailspin. Let's look ahead now. We're joined by Mark Cranfield, cross-asset strategist for Bloomberg Markets Live. Mark, after this wild week, can we expect a smoother run for assets next week, please?
Well, as Winnie was saying, it's certainly a more optimistic view that we get here in Asia. There's been some tremendous rebounds, especially in precious metals and cryptocurrencies. First thing this morning, they were really getting battered off the back of what we'd seen in Wall Street, and the losses continued pretty heavily, but tremendous rebounds during the day, and they're all in the green now, both for silver, gold, Bitcoin. They're all doing an awful lot better, and most of the equity markets are off the lows as well. But the big problem here is that what changed this week was the behavior in the New York session. We've got used to the idea that you see sell-offs in equities in the US, particularly as people are doing this rotation within the AI space. They're moving away from software stocks into hardware, but now they're beginning to question even the hardware story, particularly after last night when Amazon said that they were going to spend $200 billion in the coming year on expanding their business, which is way above the previous estimates. And most companies have raised that number as well. So we're looking at something like $600 billion of extra spending by the major tech companies, which is an awful lot to absorb at this stage in the cycle. So what the difference we've seen is that US markets finished near the lows of the day in America last night. Now, if we get something similar on Friday in Wall Street, that will again set up a lot of negativity for the week ahead. And it could again get a bid for Treasury's haven bid there. We saw the very poor jobs numbers from the Caterpillar situation there in Challenger. So really, it's a much more tenuous link here. Although Asia is doing better today, it's really what happens on Wall Street, whether the mood is sour there and how it finishes going into the weekend. People will be looking at that very closely.
And Mark, Winnie flagged the Japanese elections this weekend. What global risks should we brace for after them?
It's hard to look beyond the Japanese yen, really. This week, the yen has been creeping weaker. Dollar yen got to about 157 this week, and we're right back into that area where the US authorities intervened. The Federal Reserve asked for rate checks on the currency because it was too weak. And we've had very mixed signaling from the Japanese authorities since then, which has sown a lot more volatility into markets from the back of it. Now, once the election is out the way, investors will be looking for much more clarity, especially from the Japanese side. They will be expecting, whether it's the Prime Minister, the Finance Minister, or other voices in the Japanese elite, to be able to get right behind the yen and say, yes, we do support a strong currency. If they don't, the markets will take it into their own hands. We could easily push up to 160, 162. People will be thinking about intervention again. They may even need to ask for help from the US or from the Europeans. The yen volatility is likely to increase pretty quickly next week. Investors and traders are probably not going to give whoever wins the Japanese election. Takeichi is expected to win, but whatever the vote goes, investors are not going to have much patience. They want to know where they stand on the yen. Are they willing to do something to make it stronger, or are they just going to let it continue to slide? Yen volatility will be the key to many other things next week.
All right. Well, we'll see you on the other side. Mark Cranfield, that's our Bloomberg cross-asset strategist. Thank you. Well, diving into that tech theme now, Amazon shares slumping after the company announced plans to spend $200 billion this year on data centers, chips and other equipment. It's the latest tech company to be punished by investors for expensive AI investment plans. And I'm joined now for more by Matt Bloxham, Bloomberg Intelligence Senior Analyst. Matt, good morning. What's so worrying to investors about Amazon's CapEx plans?
Yeah, morning, Lizzie. I mean, there's a sense of inevitability about what we heard yesterday with the push up to $200 billion of capex, and I think it's the same concern we see with the rest of the tech crowd is that where's the return on investment going to come from, and how quickly is it going to come through? You know, the numbers themselves were good yesterday, similar to what we saw with Google, but people are struggling to kind of make the connection between the scale of the increase in capital spending and the pace at which revenue and profit is expanding. Now, that's not to say it's definitely not going to come through, but right now, you know, there's just too much of a disconnect for investors between the fundamentals of the business and the spending plans.
And Matt, Anthropic already announced a push into legal services. That upended software stocks. Now it's got a new model. Is Anthropic coming for the financial analysts now?
Absolutely, it is, yeah, and it's been doing so for a little while. I mean, this is what's quite interesting about Anthropic and their Claude kind of offering and the kind of large language model underpinning that kind of called Opus and this new release called 4.6. Now, all of these companies are releasing new versions every few months or so as they kind of evolve their technology. Anthropic has always made a slightly different strategic choice to both OpenAI and to Google with Gemini, not trying to appeal to everybody, so with, say, for example, a consumer-focused AI system, but really going for the enterprise market and for the kind of financial analysis segment in particular. And we kind of heard kind of stories about kind of financial analysts, investment bankers being employed to kind of help fine-tune these things, and so they certainly seem to have cornered that market in very specific high-performing enterprise-class AI assistants, and this is the latest part of that. So it's kind of really chiming well. They've got about 300,000 enterprise customers already, and I think kind of really building a reputation for them amongst the enterprise crowd, and particularly with the kind of financial community, that they have a super high-performing product relative to the other alternatives out there, and really quickly showing strong results in operation. It's interesting that Microsoft's Excel, the ultimate productivity tool, does have an Anthropic plugin that sits alongside their own Copilot offering, and it seems that the Anthropic offering within that is kind of more popular, more powerful than the Microsoft Copilot offering. So yeah, they've really kind of found a strong and powerful niche for themselves.
Well, as long as they don't come for the journalists, that's all I'm saying. Matt, thank you so much. That's Matt Bloxham, Bloomberg Intelligence Senior Analyst. Now, the US virtual embassy in Iran has issued a security alert urging American citizens to leave Iran now and not rely on the US government's help to do so. It comes ahead of planned talks in Oman due to take place today. Yesterday, White House Press Secretary Caroline Leavitt said that US Special Envoy Steve Witkoff will travel to Oman for those talks. Let's bring in Bloomberg's Jomana Basecci for the latest. Jomana, we have a report from Bloomberg Economics seeing this US strike against Iran as likely, but a lasting oil spike as not inevitable. What's the mood heading into these talks? Good morning.
Yeah, good morning, Lizzie. Well, judging by the price action of oil this week, it is headed for a weekly decline, which tells you that a lot of that geopolitical premium has actually been taken out of the curve on the fact that these negotiations are actually still going ahead despite multiple provocations over the course of the week. Remember, it was only a couple of days ago that the U.S. shot down that Iranian drone headed towards the aircraft carrier. So the talks are scheduled to begin in the next 45 minutes around 10 a.m. local time in Muscat, which is around now. We do know that the Iranian Foreign Minister Abbas Araghchi is there. He's landed with a delegation of other Iranian officials. The White House saying that Steve Witkoff will be present alongside the president's son-in-law, Jared Kushner, who's also played a big role in many of the conversations in the region as well. And this will be, Lizzie, the first round of negotiations that we've got between the U.S. and Iran since the June war last year, the first time that the two sides are meeting once again. And the thinking here, at least from the U.S. perspective, is that the Iranian regime is at the weakest it has been since 1979. The protests were very much a manifestation of that. A lot of unhappiness on the streets about the state of the economy, the decline in the currency, the high inflation levels, and all of that is on back of the sanctions that have been implemented and that are really crippling the Iranian economy. Why is that relevant? Because there is a view amongst certain members of the Trump administration that because Iran is coming from a weakened position, they will be able to extract more concessions, particularly on the extent of their nuclear program. And one of the stalling blocks last year in last year's discussions was that Iran were adamant that they wanted to keep a low-level amount of uranium enrichment. This time around, there's hope that maybe they could extract more onerous concessions on that. And actually, the Iranians may agree to 0% or maybe even 1.5% level of uranium enrichment. We don't really know at this point what is on the table. But the point is that the U.S. have sensed that this is a moment of weakness for the Iranian regime, are confident that they can extract more concessions, and if they don't, there is always that threat of military action because they have amassed so many military assets in the region. Our Bloomberg economics team do think that a U.S. strike on Iran is still inevitable, but where we go from there, again, will be a question of how big a blow that is for the Iranian regime, how they respond, whether they go down the route of disrupting the Strait of Hormuz. Still a lot of questions here, but net, I would say it is a positive that the discussions are taking place, at least from a market's perspective, a de-escalation of sorts. We'll see if they yield anything.
And indeed, the Bloomberg economics piece on the terminal lays out the possible scenarios if there is a US strike. Jumana, thank you so much for that context. That's Bloomberg's Jumana Basecci. Well, still ahead on Daybreak Europe, the ECB's president downplayed the recent euro rally. We're going to be speaking exclusively to Yannis Stournaras, the ECB Governing Council member and Bank of Greece governor. That conversation at 6:30 a.m. London time. But first up, the Japanese are heading to the polls on Sunday as Prime Minister Sanae Takaichi gambles that her strong approval ratings will translate into an increased lower house majority. We'll bring you the latest from Tokyo next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, live from Frankfurt, where it's just gone 7:18 a.m. But let's head to Japan now, where voters will be heading to the polls on Sunday for a lower house election that's a high-stakes gamble for Prime Minister Sanae Takaichi. She's seeking to shore up her coalition's majority in a vote that's set to have wide-ranging implications both for markets and for regional security. So let's get the latest now with our Bloomberg Japan politics and economics reporter, Sakura Murakami, out of Tokyo. Sakura, good morning. The Takaichi trade is very much on. Investors positioning for a decisive win for the Liberal Democratic Party. But what risks should we be looking out for investors?
Well, for investors, I guess we can say that for the moment, polls are saying that Takaichi does look like she's going to expand her majority. Some polls say that she could even win up to 300 seats in the 465-seat lower house. So it looks very much like she's on track to expand her majority. The thing is that what the messaging that comes after that will be a point of interest there. She could feel that the messaging around, for example, the sales tax cut hasn't really landed that well with the voters, for example. And if she kind of scales back the plans around spending, that could impact the Takaichi trade. So that's something to look out for. Mainly, the main thing is that how she will be talking about her wins and what she plans to implement if she does win is the main point to look out for.
Well, President Trump, of course, has endorsed Takaichi, Sakura. What's her big vision for Japan?
Yeah, that probably came as a surprise for some people, but he did endorse Takaichi. Takaichi definitely sees Japan as her kind of power over Japan as something that could bring a bolder Japan, basically. So she, for example, last year she took a very strong stand on China when she made some comments on Taiwan, and Beijing got frustrated with that. She didn't back down, even though Beijing has repeatedly asked her to basically scale back those comments. So that kind of shows the kind of direction that she wants to see Japan going. She sees Japan as having a strong economy, having a strong global presence, having a strong diplomatic presence as well. So that's the kind of direction that we'll probably be seeing more of, especially if Takaichi wins a big majority in the upcoming election on Sunday.
Well, Sakura, I know you've got a busy weekend ahead of you. We'll let you go. That's Bloomberg's Sakura Murakami in Tokyo. Thank you. Well, coming up, another election in the offing as Thailand heads to the polls this weekend as well. Voters set to usher in a fourth prime minister in 3 years. So we'll bring you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, live from Frankfurt. Now, the stakes are high for Thailand as voters head to the polls on Sunday for a snap general election. The country's economic heft in Southeast Asia has slipped, and the vote risks putting Bangkok back on a path towards political crisis. It's the subject of today's weekly documentary from Bloomberg Originals. Let's have a sneak peek.
When I think of Thailand, I think of a place where modernity exists alongside tradition. But behind that postcard image of a paradise is another reality. Instability, volatility, uncertainty.
And in recent years, economic lethargy.
There's not a lot of innovation in the economy. Thailand's GDP growth has been about 2% for a while now, while neighboring countries or peer economies are growing rapidly.
Foreign investors have taken note. Or more specifically, they've taken their money.
Thailand looking to cut rates as growth falters.
No catalyst for a reversal of Thailand's fortunes.
That word, fortunes, isn't relatable to almost anyone outside Thailand's entrenched elite. According to the World Bank, Thailand has the highest level of income inequality among Asia-Pacific countries.
What's at stake is Thailand risks getting left behind in one of the world's fastest growing regions.
So we're asking, what went wrong? And can anything be done to turn things around?
Now to some of the top stories we're following this morning. The United States and Russia have agreed to restart high-level military contacts that were suspended shortly after the invasion of Ukraine. The agreement came during negotiations in Abu Dhabi aimed at seeking an end to Russia's war. President Donald Trump's special envoy, Steve Witkoff, says that Ukraine and Russia agreed to exchange 314 prisoners as part of those peace talks. Elsewhere, UK Prime Minister Keir Starmer has apologised for appointing Peter Mandelson as US ambassador despite his known links to the paedophile financier Jeffrey Epstein. Seeking to turn the page on the political crisis engulfing his government, Starmer said that Mandelson had lied to him, portraying Epstein as someone he barely knew. Meanwhile, the UK's Defence Secretary says Mandelson played no role in facilitating the award of a £240 million data analytics contract to Palantir. The contract was awarded without competitive tender by the Ministry of Defence in December, attracting scrutiny in the wake of the Mandelson scandal. Palantir did not immediately return requests for comment, and Peter Mandelson declined to comment as well. And emails released by the US Department of Justice have also revealed Epstein's association with billionaire financier Ronald Lauder, including arrangements for lunches at Epstein's Upper East Side residence in 2017. Epstein coordinated the creation of a vehicle in 2014 that allowed Lauder and Leon Black to share ownership of a $25 million painting. The emails do not suggest Lauder or Black had involvement with Epstein beyond limited business, social and philanthropic engagements. Well, checking in on these markets, and we are looking at futures pointing lower on both sides of the Atlantic, on stateside at least, higher on Euro Stoxx 50 futures, down 0.4% for FTSE 100 futures, and checking in on the Asia session, we are just ever so slightly in the red for MSCI Asia Pacific at the moment, but silver's up, Bitcoin's up, reversing some of the earlier moves this week. We'll dive into the markets next, and we'll be speaking to the Bank of Greece Governor Yannis Stournaras after that ECB decision yesterday. Plenty more to come. Stay with us. This is Bloomberg. Good morning. Live from Frankfurt, a day after the European Central Bank decision, this is Daybreak Europe. I'm Lizzie Burden with your top stories. Feeling fragile. Global equities primed to slide lower after a bruising three-day tech rout. Silver and Bitcoin edge higher in volatile trading. Double-digit decline. Amazon shares plummet after hours as investors take fright at the company's plans for a $200 billion capex explosion. Plus, oil traders on tenterhooks as the US and Iran sit down for talks in Oman today. We'll bring you all the latest. Well, a very good morning. Happy Friday. It's 7:30 a.m. here in Frankfurt, and we saw deep declines in US tech stocks yesterday. Amazon shares dropping 11% in extended trading. The Nasdaq seeing its worst three-day rout since April. And as we check on these markets this morning, we are looking at Nasdaq futures pointing lower. Here in Europe, we have Euro Stoxx 50 futures up 0.2%. Now, dramatic moves on Bitcoin as well. It had tumbled to nearly $60,000 a token, less than half its peak price in October. It's paring those losses now. So we're up 4% at $65,715 a token. Silver also bouncing. We're up 4.3% now at $73 an ounce. Again, though, we have seen steep losses over the past week, so it's been a volatile one in these markets. A lot of introspection going around. Now, taking a look at the front pages this morning. In the UK, The Guardian leads on Keir Starmer defying calls to sack his Chief of Staff, Morgan Sweeney, the Prime Minister's most senior aide. He had advocated for Peter Mandelson to be appointed as the UK ambassador to Washington, despite Mandelson's links to the late paedophile financier Jeffrey Epstein. We had Starmer apologising in a speech for appointing Mandelson. Turning over to the Financial Times, it leads on the big tech sell-off. Investors fretting over whether investment in artificial intelligence will outpace returns from the new technology. Bloomberg actually calculating that 4 of the biggest US tech companies together have forecast capital expenditures that will reach more than $600 billion in 2026. And staying with tech, if we flip over as well to the Wall Street Journal, they're zeroing in on an incredible week for Anthropic. We were discussing this with Matt Bloxham earlier. They've also put out the Super Bowl ads that openly taunt the rival OpenAI. But you can get a roundup of all these stories that you need to know to get your day going in today's edition of Daybreak, which Somnol subscribers can find by going to DAYB Go. Well, as we are in Frankfurt, let's get back to the central banking story, shall we? The ECB President Christine Lagarde downplaying that recent euro rally as the ECB kept interest rates unchanged. Lagarde says that the economy is resilient, but she didn't offer guidance on future steps, suggesting that incoming data will steer future decisions.
A stronger euro could bring inflation down beyond current expectations. More volatile and risk-averse financial markets could weigh on demand and thereby also lower inflation.
Joining me now, I'm pleased to say, for an exclusive interview, is one of those members responsible for decision-making, Yannis Stournaras, ECB Governing Council member and Governor of the Bank of Greece. Good morning to you, Governor. Thank you for making time. I want to start with the outlook. Good morning. President Lagarde says that you're in a good place at the ECB. How confident are you that the outlook for inflation and growth is going to be able to hold up, given just how volatile the backdrop is in geopolitics?
Well, I think we are quite confident because the Eurozone economy has weathered the storm of tariffs, of fragmentation in trade, of geopolitical conflicts quite well up to now. So we have achieved soft landing, considerable growth, 1.4, 1.5%, higher than expected, low inflation, very close to the target. So we are in a stable equilibrium, I would call it.
And the exchange rate was discussed at the meeting, we're told. Are you concerned that the recent euro strength could weigh on inflation more than previously expected?
Well, we're monitoring exchange rates, and we monitor all variables that affect activity and inflation. We have incorporated this rise in the value of the euro in the baseline scenario. I think most of the appreciation has taken place in the first quarter of last year. So it was not something dramatic that should lead us to change our course of action.
Well, the 120 level has been cited as the one that complicates matters for the ECB. If a stronger currency keeps inflation below target for longer, how much of an undershoot are you willing to target? Is there a level that you're particularly watching, Governor?
Not really, but still at the values we have seen up to now are within the range of fluctuation that we have seen in the past. So we don't feel that we should change course of action. And the January inflation was a data point. Our medium-term forecast is for 2%. So we don't see any reason why we should change action.
Okay. Well, markets further out still see more scope for easing in the near term, but beyond that, they're looking for tighter policy. Do you agree with that?
Sorry?
If we look at the market pricing further out, it looks like markets are expecting easing in the near term, but tightening further out. I wonder if you agree with that.
Well, we take into account what the markets are saying, but we have our forecasts, and we don't think that we need to take any action now. Of course, we are data dependent, meeting by meeting approach. It has proven a very good practice up to now.
Okay, so you're waiting for the data. What data would trigger you to vote for a move up or down? How high is the bar to move?
As you know, we have a reaction function, inflation outlook, underlying inflation, transmission mechanism. So far, on the basis of these three principles, where we are, it's a good place. If this changes in the future, we might change.
Yeah. And hypothetically, from your perspective, is there any value in cutting rates just once more? Is it the case that actually, if you're going to move, you might as well move more than once or in a deeper move?
Well, we don't. I mean, we have judged that risks are balanced both ways, both for inflation and growth. It's one of the, I would say, few cases that we see really balanced risks and that we shouldn't act on that.
And President Lagarde highlighted technology investment as a bright spot. How do you expect AI to affect euro area growth and inflation going ahead?
Well, we have reviewed the situation of the eurozone, and we have seen some good points that investment is up. Of course, we'd like to see a better allocation towards innovation, AI. But investment is up now, is very close to what the US investment ratio is, 22.5% of GDP. Also, we have seen a redirection of demand, necessarily out of exports because of tariffs towards domestic demand, investment, and also higher consumption. So I think, of course, we need to do more. We need to proceed with more integration in Europe, with capital markets union, with banking union, with elimination of all constraints for trade. But I think the result so far is good, I think, and very optimistic.
Governor, there's been growing discussion, just coming back to the geopolitics, about some really extreme scenarios. For example, the breakup of NATO. I wonder how tail risks like that feature in your thinking when it comes to monetary policy.
Well, we take into account geopolitical uncertainty. There is no question about that. We have our baseline. But also we have scenarios. And as I said, so far, we have weathered the storm quite well. As you know, there's very high uncertainty worldwide, geopolitics, trade, fragmentation. So, yes, and I think we have shown optionality, flexibility, realism, and also soft landing. Well, I think the credibility of the ECB is very high now.
But of course, part of the consequence of all this is the rising distrust of US assets, or at least some are talking about it. President Lagarde spoke about the euro's global role. I wonder if any exodus from US markets were faster, rapid, disorderly, that wouldn't necessarily help Europe, would it? Well,
we concentrate on what Europe should do. It's true that world risks now are favoring the euro. Europe behaves as a safe asset, contrary to what happened in the past. So we take this into account. It is helping our monetary policy cause, I think.
Just finally, Governor, how are you thinking about the risks around the French election? If markets start to question fiscal discipline, can spreads stay tight?
Well, markets so far are quite benign. I mean, we haven't seen huge fluctuations in spreads, including France, actually. So markets are expecting that measures will be taken to contain the fiscal problem. So it's only 20 or 30 basis points since the beginning of the so-called French budget problem. So markets are expecting that France will react positively.
Okay. Governor, we appreciate you making time the morning after the decision. I hope you have a good weekend. That's Yannis Stournaras, ECB Governing Council member and Governor of the Bank of Greece. Well, speaking of central banks, the Bank of England Governor Andrew Bailey has appeared to endorse markets betting on a 50% chance of a rate cut in March. Bloomberg's Francine Lacroix spoke to the Governor following the more dovish than expected vote split yesterday.
You may have seen it in my submission of my paragraph in the minutes. I said that I will be, I said that I think there is, a prospect of, some further cut in interest rates. And I said, I think in my last sentence, I said I'll go into each meeting asking myself that question. So, look, I think, going into March 50-50 is not a bad place to be in that sense, because in a sense markets are asking themselves the same question that I'm asking, or perhaps they're just working out what question I'm asking and, in a sense, following that. But yeah, I think that's a reasonable question to ask, because look, we've had good news. We think inflation is now going to come down to target sooner than we thought it would. I think this spring sometime. But the real question now is it going to sustain? Is it going to be sustained there? Because that's our job. And that's all to do with underlying inflation, and that's where I certainly think that we do need, we need some more evidence base to mount that. But that's the question we'll be asking ourselves.
Why have you dropped the word gradual from your formal guidance? It had been there for quite some time.
Well, I think for a couple of reasons. One, because we've made a lot of progress, and the second one, which is closely related actually. There does come a point, if we don't get any more shocks in the world economy, that's a big if, but we don't. These are the things we don't know about, so we can't, in a sense, factor the things we don't know about in. So let's assume that's what the forecast is, we've published is really based on. Then I think we are now getting towards what I might call that neutral level of interest rates, where it will sustain inflation. It's the rate that will sustain inflation at the target. We don't know it. We don't know exactly where that is because it's a good concept, hard to translate into any precise practice.
But are we close?
Well, in a sense, we must be getting closer, but I think we are closer. So, I think the change of language is really to change the language a bit to this language we've used a few times about, it's a closer call at this point.
When you look at the shocks, I mean, you said today that the global economy has just been pretty good at weathering some of the shocks.
Yes.
But is it that we could see less shocks, or is that we're just much more adaptable?
We never know what shocks we're going to see by definition, almost. No, look, I think it is interesting that the world economy has been more resilient to all the uncertainty we've had over the last year. Then I think if we go back to the conversation we were having this time last year, actually, when we were doing this report this time last year, our concerns about how the world economy was going to be affected by the news that at that point was beginning to build up, it has certainly turned out to be more resilient.
Bank of England Governor Andrew Bailey speaking to Bloomberg's Francine Lacroix. Well, coming up on Daybreak Europe, attitudes to the defence sector have shifted in the past year, and now a string of deals suggest that private credit funds are looking to get in on the action. We'll bring you more on that next. This is Bloomberg. Welcome Welcome back to Bloomberg Daybreak Europe. I'm Lizzie Burden in Frankfurt. Now to some top corporate news. SocGen has launched a €1.46 billion buyback programme after posting fourth quarter profit that beat estimates. This as the French lender's CEO reinforces his pledge to focus on investor payouts. Despite the beat on net income, the bank's equity and fixed income trading units underperformed, both missing forecasts. Elsewhere, Banco Sabadell CEO Cesar González Bueno is leaving in a surprise move after leading the lender's successful defence against a hostile bid from BBVA. Marc Armagnol, who runs Sabadell's UK unit TSB, which was sold to Santander, of course, last year, will take over the top job. The change is pending approval from regulators. And we're going to be hearing from González Bueno following the bank's earnings today and his surprise announcement. Don't miss that conversation starting at 7:10 a.m. London time. Elsewhere, Rio Tinto is walking away from talks to acquire Glencore after the two sides failed to agree on a valuation. The breakdown scuttles a potential mega merger that would have created the world's largest mining company. The two sides confirmed they were in talks in early January and have been wrangling over the premium that Rio would need to pay. So those are some of our top corporate stories this morning. Let's dive into another. A string of private credit deals in recent weeks suggests some of the world's most deep-pocketed investors are getting behind Europe's defence build-up. I'm joined now for more by Bloomberg's Francesca Veronesi. Francesca, good morning. I wonder, could private credit be the answer to the years of underinvestment in defence?
That might be a little bit optimistic. I believe the efforts of private credit in defence at the moment are nascent in Europe. What was so interesting about our reporting recently is that these transactions used to be very rare, and we've now seen 4 in just the past few weeks. So to give you an idea of the scale, across those 4 transactions, the debt issued was around $1 billion. And that's very little compared to the huge amount that European governments are investing in defence. So I think it's early days to say that private credit can play a significant role in Europe's rearmament, but it has a role to play.
So it's early days. Which names are we talking about here, and how much could the opportunity grow?
Sure. So it's super interesting in the sense that some asset managers have experience in investing in defence, especially in the US. So we're talking about global alternative asset managers. They have experience investing in private equity in defence, and those asset managers have private credit arms, so they're particularly well positioned to shift and also deploy via private credit. So out of the transactions that we've reported on, Carlyle had made some. Having said this, not only large asset managers that have previously invested in defence could be playing a role. We also have more generic, sector agnostic asset managers that for the first time are considering defence. So that's kind of the shift that's happening.
Yeah, does it mean that the ESG concerns have fallen by the wayside?
That's a really interesting question. ESG restrictions are still in place. It's the interpretation of those restrictions that have changed. So typically you would have the investors in private credit funds. So that's, for instance, insurance company, pension funds. So they used to be very strict about these restrictions. And defense was considered similar to gambling or tobacco investments. It was a no-no. You just couldn't. Private credit funds just could not invest in these kinds of companies. Having said this, there has been, we're really hearing about a shift in mentality, in interpretation on behalf of these investors. So defense is being reframed as important to national security, and it is important to support the industrial resilience of the continent. So thanks to this, investors are now okay and ready to allow the private credit firms to invest in defence. And also there's some regulatory changes. The European Commission issued a notice that clarified that defence investments are in line with its sustainability framework. So also that kind of clarification of the legal interpretation of ESG requirements has been helpful.
Okay, so the policy helping to change the narrative as well. Francesca, really great reporting. I recommend a read of that piece on the terminal. That's Francesca Veronesi. Thank you so much. We've got plenty more still to come on Daybreak Europe, so don't go anywhere. This is Bloomberg.
I think there is, a prospect of, some further cutting interest rates. And I said, I think in my last sentence, I said I'll go into each meeting asking myself that question. So, look, I think, going into March 50/50 is not a bad place to be in.
Bank of England Governor Andrew Bailey there. Well, the pound yesterday saw its worst drop against the euro since August, initially on speculation around Prime Minister Keir Starmer's future, but then on that dovish vote split from the Bank of England. 5-4 to hold, the governor himself the deciding vote. And ING strategists see the pound dropping to 90 pence per euro. That would be the weakest since the Liz Truss moment in 2022. Currently trading at 115, but on the flip side, flip the board, and we can take a look at the dollar's strength, or at least the move away from de-dollarization, and how it's been weighing on gold. Now, gold this morning is having a slight recovery. We're about $4,840 an ounce. But our MLive team flagging that we need to keep an eye on gold over the weekend, because the People's Bank of China over the weekend, if it adds to its gold stash, could help gold to reassert itself. We also have that raft of US economic data and Fed speak next week. If the texture of the figures and the tone of the words merely leave the door open to more Fed cuts this year, that could also help the yellow metal. Flip the board one more time, because we've also seen software stocks and Bitcoin tracking each other lower. Bitcoin seeing a more than 50% retreat from its October peak. Software stocks extending their tumble after Anthropic rolled out that new model, which we were discussing with Matt Bloxham, and that risk-off mood reflected in the US futures picture this morning. Risk events today, we have the US-Iran talks, data stateside, and Fed speak, so plenty more before the weekend. The opening trades up next, Anna Guy and Tom will take you all the way to the open. Have a good one. This is Bloomberg.